Enterprise Products Partners Stock, or as most people know them, EPD Stock. This stock is flat year to date, underperforming the S&P 500. EPD Stock reported an EPS of $0.72, beating analysis estimations by a small amount. Revenue was reported at $14.6 billion and also beats the estimations. And people love EPD stock for different reasons. And one of them is the dividend, and I understand why, with dividend yield at 7.85% and 25 consecutive years of dividend increases. If we look at the total returns in the past 5 years, we see that EPD stock underperformed the S&P 500, and this is including dividends. So could this be the perfect time to buy EPD stock? Well, by the end of the video I will give you my 3 price targets, so make sure to stay tuned and see how I build up to these price targets. And more importantly, which price target is the most justified in my opinion. I'm very excited to see what you guys think about this stock, so please let me know your thoughts in the comments. My name is Thomas and this is Thomas Invest. I'm an investor looking for great stocks at great prices. So what does EPD do? Enterprise Product Partners is one of the largest midstream companies, with operations servicing most producing regions in the lower 48 states. In here we see the results of the fourth quarter, with operating income reported at $1.9 billion, up from $1.76 billion in 2022. For the full year, operating income is nearly flat. For the net income we see the same thing happening, with an increase in the fourth quarter, but a flat line on the full year numbers. Free cash flow is down in the fourth quarter, however on the full year we see that they reported a big increase, which is fine by me. In here we see the volume for the fourth quarter and full year per segment. All segments reported an increase year over year, which looks good to me. EPD increases the dividend with 5% year over year in the fourth quarter, resulting in a CFFO payout ratio of 56% and a free cash flow payout ratio of 94%. And now that we know a bit more about the company, it's time to check the fundamentals of this stock. But first, if you made it this far into the video, I want to thank you a lot for watching this video. Make sure to subscribe to my channel to receive multiple analyses every week. And also join my Discord channel for free to meet other people within the community and to talk about stocks. It's completely free, so don't miss it out. Let's continue by diving into the fundamentals. EPD stock is a 58 billion market cap company. PE ratio is at 10, indicating they could be undervalued right now. Later in this video I will show you my 3 price targets for EPD stock, so make sure to watch until the end. And in the meantime, please let me know your thoughts on the current valuation on Enterprise Products Partners. And I'm also interested to hear your thoughts in general on this company. Revenue is at 48 billion, and in this graph we see that revenue went up and down quite a lot. This is also very common for a company in this industry. However, I always prefer a bit more steady pattern here. Margins are going up in the long run, and this is really important to me. With revenue being a roller coaster, you want the margins to increase at a decent pace. EPS is looking pretty good. In the long run it's going up, and I must say it's pretty consistent. Analysis expected EPS will decrease in the coming years, mostly because of 2 analysis projections in 2026. For the revenue, analysis expect 54 billion in 2027, with a really slow growth pattern. Return on assets is sitting at 6%, which is a decent number. Return on equity looks really good, and the most important number, return on invested capital, is sitting at 11%, which is a really great number. It is also higher versus the 5-year average, which is a good thing. Current ratio is at 0.92, which is a decent number. Nothing really special to mention here, to be honest. And right now EPD has 29 billion in debt. And I prefer companies that can pay down at least a big chunk of their total debt with the total cash. EPD has 171 million in total cash, so they can't pay down a big chunk of their debt. This is something that I don't like. And to be honest, this could be a potential red flag to me, since it is really out of balance. So it is very important that free cash flow is growing, since this is used to pay down debt of course, but also to buy back shares, pay dividends and all other things. And here we see that free cash flow is going up in the long run. It is not really steady and consistent, but in general it looks good to me. Recent increases are a fluke in my opinion. Shares outstanding are increasing, which is something that I don't like. However, companies like EPD increases shares to raise capital. But when shares outstanding are decreasing, it increases your ownership in the company, increases the EPS, lowers the PE ratio and makes it easier to maintain and increase the dividends. And since we're talking about dividends anyways, dividend yield is sitting at 7.85%, which is an insane number. Annual payout is at $2.06 and payout ratio is at 79%. And I prefer 50% or lower, so right now they have 21% left in cash to buy back shares, pay down debt, do acquisitions and all other things. The 5-year growth rate is at 3%, which is a really low number, but since the dividend yield is already at 7.8%, I don't mind that much. On top of that, they have increased the dividends for 25 years in a row, which is very impressive. And if you take a look at these numbers, the dividends paid since 2012, you see that EPD did increase the dividends at a slow pace. However, in the long run, this really adds up. Payout ratio is a very important metric with dividends. It tells you if the dividends are safe. In here we see that payout ratio is decreasing, which is a good thing. In this graph we see the expected dividends in 2024, 2025 and 2026. Of course this is an estimation and can be highly impacted by results, but it gives you a rough indication. It's expected to increase at a similar rate versus previous numbers. Overall these dividends look really good to me, but how about the historical returns? I decided to compare EPD stock with the overall market, in this case the S&P 500. Next to that I added WMB and ENB. On the 5-year chart we see that all the 3 stocks underperformed the S&P 500. And remember, this is including dividends. WMB had the highest return with 73% out of these 3 stocks. The S&P 500 sits at a 101% return. On the 1-year chart things look pretty similar, with the S&P 500 having a 25% return, while all the others are sitting significantly lower. On the 6-month chart it is again the S&P 500 that is having the highest return here. On the 1-month chart it is again the S&P 500 with the highest return. So bottom line, the S&P 500 was by far the better investment over the past 5 years. And keep in mind this is including dividends. But could this be the perfect time to buy EPD stock? Well, let's check the 3 price targets that I created using the Everything Money software, which is one of the best tools out there. I'm using a low, mid and high assumption to get the 3 price targets, starting off with revenue growth. For the revenue growth I'm filling in 0, 2 and 4%, based on historical performance, their own outlook, but also because of the analysis. For the profit margin I'm putting in 10.5, 11 and 11.5. For the free cash flow margin I'm putting in slightly lower numbers. For the PE ratio I'm putting in 9, 10 and 11. For the price to free cash flow I'm putting in the same numbers. My desired annual return is 12.5%, since I can get an easy 10% average annual return with owning an ETF. Right now EPD stock is around $26.5. I hit analyze and we see a lot of red numbers. We have a low price target of $17 to $18. We have a mid price target of $22 to $23 and we have a high price target of $27 to $28. And to me the high price target is the most justified here, meaning the stock could be undervalued according to these numbers. And this kinda surprised me a little bit. So what do you think is the most justified price target here? Let me know in the comments down below. My final conclusion on EPD stock is that it comes with a few risks. Of course you have the industry risks that are attached to this company. Next to that, debt levels don't look any good. But the fact that they can increase margins at a pretty decent pace is something that I really like. Dividends also look really good. We have a high dividend yield with even some small growth and 25 years of dividend increases. From a value point of view, things don't look that bad either. However, the stock isn't massively undervalued. So it really depends on your play if EPD stock is a great buy right now. For now, I will keep waiting for the stock price to come down to have a better valuation. Until then, I will keep analyzing them from time to time. And remember to always do your own research and never fully trust on what I or other YouTubers say about a stock. I'm not a financial advisor and this content is just for entertaining purposes only. I hope you liked this video and I did bring some insights of the company to you. I would really appreciate a thumbs up and make sure to subscribe to get notified when I'm posting a new video. Thanks for watching and I will see you in my next video.